Hey, how you doing? It's Clayton Tini from the First Home Buyer Club. 100 lessons in 100 days, and day 34, lesson 34. Today, what I want to talk about is the biggest concern most people have. But what about if the bank says no? And here's the funny thing about it. What happens if they do say no? Like, think about it, really. Like, at the end of the day, you still have to get up in the mornings. You still have to cook. You still have to clean. You still have to go to work. Life is not going to change on the worst case that the bank does say no. But just to help you make feel better and get prepared for that, let's understand what you can and can't be purchasing, right? So the first couple of things I want to talk about is that I always use a simple rule of thumb when we speak to clients in regards to what they can borrow, and it's just 6 times what they earn. Now, it's not 100% because obviously there's things that factor in like debts and kids and bills that are accounted on top, but that's a good start point. And here's what I mean: like combined income, you and your partner or you by yourself is 100,000. That that you can roughly go to somewhere around $600,000. Now, if someone's telling you and your partner or you work $50,000 job, and that you can borrow $500,000 or $600,000, they're not telling the truth, right? It's not going to work. Don't just believe something that someone else says just for the sake of it. Do a little bit more research. Now, here's the thing: what a couple of my clients find sometimes from time to time when they go direct to a bank. Now, as you would have heard, I'm not being overly biased. However, I would recommend when you especially when you're about to purchase your first home, do you go see a mortgage broker, because they do a lot of the groundwork on your behalf and have access to different banks and lenders along the way. We use them as a steady point with all our clients to ensure they get the best service moving forward when looking for and buying their first home. But I've had times when clients have I've gone into this bank and they've said we can borrow 600,000. Now, the problem is when you go into a bank, they haven't collected your pay slips, debt statements, group certificates, all the financial information that you need to make a decision on purchasing. Yet over the counter, they're giving you this figure. What we've found is that sometimes they want to sign you up so that if you ever get a loan on any of the other ones of those banks, it doesn't matter if it's that branch or not, at least it's going to come back to that branch. So just be aware of that if you do go direct in the bank, and just be a little bit more open-minded sometimes, because we tend to go to the only bank that we actually have and think that that's going to be the way that we get our own home. A few other things to take in consideration is that if you're a casual employee, yes, you can purchase, but generally you have to be in the position at least 12 months, and you can only use 46 weeks of the 52 weeks in the year in the amount that you can borrow. All right, so here's 5 things that I think you should do in preparation to looking at purchasing the first home. Borrowing capacity. Do you actually earn enough? You can use that 6 times principle. You can speak to a mortgage broker. You can run the calculations online. However, firstly, you need to figure out, do you actually afford enough to be able to purchase that house, that area, that block of land? The second thing, do you have enough savings in place right now to purchase? Are you using a parent as a guarantor? Are you using a tax return, a sale of an asset, a gift? How are you getting these funds to purchase your own home? Third point, and I talk about this a lot: go over your budget. Does your current budget allow you to be able to purchase your own home? You'll know the answer to that. Don't just say because one week you save $500 that every week you save $500. Because unless you have $26,000 over the last 12 months, you're not sticking to that plan, right? The other thing is you can save $500 a week for 3 weeks, and then on the 4th week, spend $1,500. That means that you're really on par. So don't forget the bills that come throughout the year when factoring in your deposit and how much you're saving. 4th point, affordability of the house. Does this house and the purchase of this home come in line with your current budget? Can you afford it? And can you afford the repayments? The other thing you got to remember is when you own a home, there's other costs associated with owning a home, rates, water, insurances. Now, these aren't going to cost you $1 million, but it does cost money, right? So do your research. You can find a lot of these costs online. Google searches for insurances and rates. Most of this information can be found out. Obviously, add all that figure over the year, divided by 52, and then you can find out what your weekly costs are roughly going to be for associated costs to own your own home. Point number 5, have you got your credit report and have you checked your credit score? Here's a big thing you got to realize: is there any marks in your credit file from the past that you knew or didn't know about? Is it going to affect you in the future? And what's your current credit score? If you have a credit score of 200 or 300, then that means that something's wrong, right? 400, there's probably something going on there. 500 is acceptable. $700 above is a very good score. So just keep that in mind when you're looking. And now what? Point 6. Now what? You're ready. You've got all your information. You've collected it. You've got a figure. Now's the point where you can start looking for your own home and seeing where it works. Now, obviously, at the First Home Buyer Club, we do all these steps on your behalf to make sure that when we do look for the perfect house and land package, that everything's in play. What's a couple other things to consider when looking at purchasing your own? Your current debts. What are they? How much are they? What's the monthly, weekly, or fortnightly cost of those debts? Can you consolidate them? Do you have extra savings to pay out some of those debts? How do we reduce that figure to ensure that you can actually live and pay a mortgage with a lot more money in your pocket than you were before? Point number 2, do you have enough savings? And as we spoke about it, where are we going to get the money from? Gift, sale of an asset, tax return, cashing in your holiday pay. We're going to use the First Home Buyer Grant, but where else are we getting that from? Are we using a parent as a guarantor? If you use a parent as a guarantor, it's a great opportunity to start paying off debts with your current deposit, so that you don't have any other costs associated when you're trying to pay off the home. It will allow you to pay off that home a lot faster. Home builder boost. If you're an Australian citizen, you're entitled to it. Is there factors that you can use that towards? Do you need to use it towards a house? Or because you're going to collect it afterwards, is there ways that you can help pay off debt, borrow it off family, or reimburse it somewhere? Like, think outside of this square here to try and increase your chances of approval and increase the chances of you having a better life without having to worry about all your money getting taken through a mortgage issue. And the last point that I'm going to talk about and things to consider is locations. Sometimes we get so caught up on the current location we live at when we don't have a good look around the surrounding areas. And you'll find from time to time that the surrounding areas can be as much as $50,000 more for the same house. Have a look around the surrounding areas. Look at the things that are important for you. Public transport, schools, shops. Is there other areas close to where you're looking at where you can save yourself $50,000 or $100,000? And there are a lot of deals like that out there where you can save that money, which actually will automatically bring down your mortgage straight away and bring down your costs. All right, guys, we're going to talk a little bit more about the locations and what you should be looking for tomorrow. Enjoy your Sunday. Talk to you later. Bye.